go. All right, so we're gonna go through and set up the charts here, and we're on the 4-hour time frame. We have a beautiful trade just sitting right here at 280. Actually, I'm gonna come because I already know what happened yesterday. We ain't gonna have that happen again. We're gonna come to 278 and just chill at 278 flat, not 50. Fine, I'll type it in. 7-8. Sell there. Just to make sure that I get into the trade because the upside's up to 87 and we're risking $100. So we have a $10 window there to push up to this candle. We start pushing up there, we know that we'll go beyond that, but I'm not worried about that for now. Right now, we're gonna go ahead and go through and set these charts up. Let's just take a look at the weekly real quick. As you guys can see, crazy move this week over week for like 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks straight, really 10. Market just shoots up to the upside. It's just climbing and climbing and climbing. We break a structure here, climb some more, climb some more, climb some more, get a little pullback, climb some more. And we're experiencing right now that all of these gaps, this big candle here, this big candle here, this big candle here, all these gaps are still left behind. We've almost made it to equalization of filling back to right here. We got really close and then it just stopped flat and started rising back up because of all of the earnings that we had going on. And that's really what's fueling. You can see all of this news. This is all these little lightning bolts here news. You had the manufacturing PMI. You had manufacturing PMI this day. You had this day where there's a treasury. The treasury is actually today. Treasury today as well. You've got 8-4. All this upcoming news and all of this news from last week in July is pretty much all that's fueling this uptrend in the market right now. Oil prices going down, tech kind of leveling out and people stopping to sell off, but don't be fooled. This market still has to come down here and clean up all of this mess that we left behind. It can't just keep running and running and running. You see there's always equalization from the weekly time frame. This is back to November 2024. Shifted all the way down here, pulled all the way back to equalize, broke out, pulled all the way back to right there to equalize, broke out. So we still have this little area here where we need to clean up. What's going on with that? I hear people coming in and out. And they see the charts. I don't know if they hear the sound. They definitely hear it because it moves when I talk, so they hear me.
Right, good morning.
I'm just making sure you guys can hear me.
Yeah.
Hey,
good morning.
What's going on over here on the chart? Just getting this set up. We're at 435 for today. I decided to come over here on the fund, and as you can see, the overall balance is negative 298 because I was down $700 on this account before I started locking in on it. But a lot of what's going on right now, like I was saying, is just the news is drawing us up in the market. We've had so much news since July started, pushing us to the upside for this previous week where it put us down to this week where we're trending back up. And they're looking for those all-time highs. We still have all the liquidity down here to the bottom side to look forward to. But with that said, I'll start marking out my chart like I always do using the 4-hour time frame. You guys look at it right now for the 200 EMA right here. We had a beautiful push up to it last night, stopped right at the 200, pulled back, and then started trending back up after that overnight. See me sitting between this level right here. I decided to come down to 278 because yesterday I missed out on two $1,000 trades with 5 micros in a row. Both my levels were the exact setup yesterday, basically where the number should draw to. We get within 25 cents and then it just, both of these, this here and this here, fell off the planet. And I missed both of those trades. So I said, let me get inside of it this time and give myself a little bit more. So if you click on this little manage bracket, it'll show you how much you're risking to how much you want to get. Normally I do go for the full $1,000, but because I already have $435 for the day, I put it to $990, and then I'll move it as the market moves along if I'm watching it. Like let's say I head to work in like an hour or so, whatever, to the warehouse, and I can't watch it, then the bracket will do the work for me. But I like that because lately we've been moving about $100 an hour, $200 an hour, right? So what I normally do is a quarter of it. I'll take $50, but because I'm looking to make up some ground on this account, I'm gonna go ahead and shoot for the full $100 move. And I'm already halfway there for the day. So once I go another $500, I can lock in that 500. Let's say it goes from here to here. Lock in the 500 of the $50 move, and then move on past that. And to equate what it is and how I understand how the market pays you out for these contracts. For every one contract you have, let's say I go down to one contract here, every $50 the market moves in your favor is 100 times the number of contracts you have. So if you have one contract and it moves $50 in your favor, you'll get $100. If you have two contracts, $200, so on and so forth. That is the easiest way to look at it. You can divide it into $25 if you want. For every $25, it'll move $50. But it's honestly much easier if you just go for a $50 move. If you look at the stock market, as we're looking right now, every single one of these, this is 830 all the way up to $200 move. This is 05 all the way up to $120 move. So you're getting these if you go to the hourly even, you're getting these moves that are showing you like, hey, we go $50, we go $100, we go $200 an hour. So you just play the better hours. There are small hours like this in the evening, which even this is just an uptrending hour. It comes down to the 90 EMA for the 1 hour time frame and just continues the trend. That's a beautiful trade to get in. That's a great entry right there, 935 to 940. Normally I lock in about right here, 940.75. My drawdown will take me down to this line right here, and then that's like $100 to $150. I'll be cool there, and then I'll just ride the trend up. But for these candles here, I always look at the market in terms of $100. You know, it's just easier like that. So now that I'm moving up to 5 contracts from the initial, you see that I got here, I got 435, I got 7. Every couple of dollars helps. It doesn't matter if you only make $12. Green is green, especially when you start off with a poor trading day. So every few dollars will help. But when I'm setting up my trades, I'm looking for stuff like this. Stuff that happens over and over and over again in the market. And that's honestly as easy as my setups go. So I see that we keep having a trade right here. Come here and stop, come here and stop. So you got like support around here. You have resistance right here. Once we get above it, it becomes support right here. And then resistance goes higher. And as you're doing market structure, that's all it is. If I put a line right here on this candle, and I start going to the left, you see that it hit there. It's close there. It hits here, it hits here, it hits here. And then they start hitting it over and over and over again. And you realize that that's where the price action is. That's where the market structure actually is. You put a line here on this candle, this random candle right here, just between those two candles. And you start working your way to the right. As we get to the future, you see over and over again, we go to that same spot. So once you start seeing the same thing happening over and over and over again on the 4 hour time frame, you start to see how market structure works. But to take trades, you need to know how the day goes as a whole. So let's go back to the 4 hour time frame. And as you look at the 4 hour time frame instead of the 1 hour, look at how those two lines that I just set up on the 4 hour time frame match up even better. So that's why the higher time frame rules, and that's why I use the higher time frame, because the higher time frame will not only give me the picture, but a much cleaner picture than the 1 hour, 15, 5, and everything else can. So now I can make my adjustments, and I can go, oh, okay, it's not 17, it's closer to 1750. And that small adjustment can be the difference between getting into a trade and having a successful trade and not having a successful trade. And I can say, oh, it's not 12, it's actually 110. So then I come down there. That's getting into a better trade. That's an A+ trade versus, you know, waiting a little bit and maybe missing that trade like I did yesterday. And then the move just goes on and on and on, and you squeeze the market down a bit so that you can see the range. And you start to see like, oh, this is 50% of the range. The range is from here. We'll mark out. Boom, that to down here, the lowest that we've had. So you have the range being from $30,000 to $27,000, basically a $3,000 window. We are above the 50% retracement right there, but look at that. What I marked out randomly on the 1 hour is basically 50%. Sure, I could draw it down to right here to make it exactly 50%, but this is basically 50 to 55% of the overall market move. And inevitably, because I'm on the 4 hour, I will get the 50% area by marking this candle right here. This random blue candle that you see right here. As I zoom in, you'll see it. I've trained my eyes to see it instantly, but you'll see the move and what the market wants to do the more time you spend studying the 4 hour time frame. The daily doesn't give you as clean a picture as the 4 hour does. The weekly doesn't give you as clean a picture as the 4 hour does. But for swing trading, you would use those more often than you would use these, because you can see the whole market by going to the weekly. You see how all of a sudden the candles are very wide, and yes, I can mark these areas out and it may be helpful as far as pullbacks go, but you see I'm sitting even on the weekly time frame. That's beautiful. I set this up on the 4 hour time frame, and I'm sitting inside of this candle right here on the weekly time frame, and it goes up to where? It goes up to 29,291. If I get exact, whatever, we'll say 90. I'm sitting within the window where I can get to that trade, get in before this candle, have the reversal to right here where we're at, and that is a $70 move. That $70 move is going to give me about $700 on this trade, if it plays out the way that I believe it should. And more often than not in the stock market, it does honestly replay the same plays over and over and over again. And that's how I built my trading structure. I built my entire system off of just studying the market, studying time frame analysis, and then watching what happens repeated over and over and over again. Look at all these candles that come to this. These are 4-hour candles that are telling you that we always come to this point at some point in time. Sure, we have manipulations that stretch us down a little bit lower, and when you get these manipulations out of these areas, they become important, so you mark them out. Let's say I wanted to draw, this is honestly a demand zone. It was a demand zone that we're breaking through. It's a supply zone now. Draw that out and then put the other one right here, and now you have a 152, which is really 150, so a 153, a 178, a $20 window. Take this right here, this drawing tool, click on this little arrow, it'll give you a box. I have a rectangle, all my rectangles are colored already. This was supply. We'll put slash demand because now we're above it. And we'll pull back to that, and that'll be a nice bouncing point. But that 175 means that that's a 180 play. So right here at the top of these candles is 193, 180 is right there. And you'll notice that our supply zone runs right through these candles. I could lower it a little bit, but I actually like it where it is. It's actually perfectly in line with these candles right here. So that's a good one. I go to the daily time frame, stretch that out backwards, stretch it out forward so that it goes into the future. Go to the weekly time frame, I can move it even further, and now I have a supply and a demand zone to work off of. Go back to the 4-hour time frame, click the circle to refresh, and we'll get back to drawing out our levels. So the next level that we're trying to reach after the level where I'm set up is right here. Now this 341 is going to be a strong draw, but I want to hit the first level first because we've been drawing up all night long. We've been pushing up since 6 o'clock in the morning on Monday. So I want to hit the first level first of where we're supposed to pull it back, which is where I'm sitting, and then the next level is going to be the stronger draw for when the market breaks out in the morning. These higher highs, or these equal highs right here, should be a pullback area. You've seen multiple times. Right here, the bodies of the candles are the actual market level. The tops of the candles are manipulations. However, manipulations will be a draw. There'll be a pulling force in the market. But you saw, went up there, we broke out. The manipulation stopped, we went back up to the manipulation, retested it, pulled back down, and then the level becomes the bodies of these candles. So what do? We draw down, we draw down, we draw down, we hit the body of this candle here, start drawing back up, and then we can't get past the bodies of the candles, which is how you know that the body of the candle is the actual price action. The manipulation may be the overall move, but the body is the actual price action, and we always go back to a previous body. Earlier this morning, we were at 172, we got hung up right here. Let's go back to the 1 minute time frame so you guys can see that. And you see, look where we got hung up right there at that 172 area. We get hung up right here. Over and over and over again, we hit that. And you're asking yourself, like, on the 1 minute, like, why does this keep happening? That's when you go to the 4-hour time frame and you say, oh, okay, there was the 2 candles right there at that 173 to 177 area. That's why we keep getting hung up in that area. And it keeps pulling back. But I'm going to go ahead and draw out some more just off eye. Right here, $400. This is a point that I definitely want to hit at some point today. Hard to get it perfectly on there with this, but it's fine. Go to this candle here, 445 to the 450 area. I'm going to take that and move it up ever so slightly to the top of the other candle right there. I fat fingered that, but it still worked out. It's right around 450, whatever. You see these 2 candles split here. You want that. You want this particular candle wick here from the manipulation. Funny enough, 560. Every stopping point for this market when it comes to NQ is going to be at 500, 20, 40, 60, 80, and then the 100 again. And then in between there will be the other levels that you see, like the 35, the 45, and stuff like that. People mentally have a number in mind where they want to go and they want to place their trades. And when you see the market moving, you also have that same thing come into your mind where you're like, I want to place my trades. If you look at my trades down here, look at where I placed them. I placed it at 139. Why did I place it at 139? Well, because I was certain that at 140 we were going to stop, but I'm like, I need to be within that 140 in order to get this trade to work out. We get to the 140, 139, we hit, get into my trade, and I'll take you to that trade. Actually, that trade was at 6:45 in the morning. So let's go back to 6:45 in the morning, and you'll see in my video that I put in the profits and earnings and everything how this trade actually played out before it broke out. So 6:45 comes on around right here. I get into my trade to the downside, pushes up a little bit, never goes too much higher than the 140. We get to 146 and then starts trending down, gets all the way down to about right here, which is at about $730. Unfortunately, I was looking for the bottom of this candle to lock in the full $1,000 move. I obviously didn't get that, but upon realizing that we were about to hit 7 o'clock, I said, all right, cool, we're about to hit 7. Let me go ahead and lock in as much profit as possible. So I locked in about 450, and then I went ahead and at 7 o'clock, you see, it literally closed out at 7 o'clock because 7 o'clock this candle hit and just jumped, and then from that point on, it sailed back up. Now, had I been right here, 140, and stayed in that play, I would have lost all my money because eventually it would have went higher than the 147 and it would went right here to 150, and I would have lost that trade for no reason when I had $700 on the board already. At least secure a third of that to 2/3 of that. So I got 2/3 locked in the 2/3. 7 o'clock hits, and I'll just take you to the 1 second time frame. We'll type in 7 a.m. for today. And to do that, you just erase that, type in 7, click go to. That's 1 second. And I've become so hyper aware of the fact of time frame analysis on top of my technical analysis. In 1 second, we went from 114 to 134 in 2 seconds, 3 seconds. 114 to 134, a $20 jump from the time that I said, let me lock in some profit, to the time that 7 o'clock hit. It went boom, instantly $10, another $5, and then the second part of the $10 for $20 in 3 seconds. And you start to become acutely aware of that from watching what happens and when. Every time you guys get on here, you see 8:30 in the morning at Eastern Standard Time. For whatever reason, the market jumps right then. So what they started doing was they wisened up to the fact that all traders kind of know that. All traders knew 8:30 in the morning the market's going to do something extreme, so I can get in there and I can get lucky, right? So let's go to 8:30 in the morning now. This is 7 o'clock in the morning. Go to 8:30 and show you how they wisened up for this year. They're never going to let us be ahead of the curve. They're never going to do it so that it's so predictable that we can always get something done, right? So look at 8:30. 8:30 candle right here didn't do what it normally does. You get a little bit of a boost at 8:30. You get a little bit of a boost. It gradually goes there over the seconds. First second, you get nothing. Normally, you would get what you got at 7 o'clock, right? So now they moved it and maneuvered it so that it's not moving the way it used to. But however, this is a trick play. It continues that trend up, hits that 230, and then starts trending down. So now within that several seconds that you get into that 8:30 play that you would usually be in, you start losing instead of gaining. Whereas with the 7 o'clock play, that's where they flipped it to. So I started setting my alarm for 6:58 so that even if I'm in a trade, I can go in there and look really quickly to make sure that, okay, I need to get in or I need to get out depending on what's going on heading into 7 o'clock. But that is a trick. Then look right here. This is the real killer. 8:31 is where they started stacking the moves again. So in that 1 minute, you trend up, boom, you get to this high that you've been looking to reach all this time, and then it just starts falling off and falling off and falling off, and then you get to that low, and then it stops, and then it starts trending back up from that low. But that's the trick that they've been putting into the market lately. They're not giving us all the things that we've been used to over the last several years. They've slowly taken away, from trading view messing up to the hours not being the exact same that the money moves. Like, you could set your watch to 1 p.m. every single day for the last like 4 years, and 1 p.m. was going to have like a major move in it. They started taking it out of 1 p.m. as well. That's when I was like, okay, so time frame analysis coming back in, we need to figure out where they're putting all these moves at. So you got a 1300 yesterday, and look at 1 p.m. yesterday. They're just not giving it to us like they used to anymore. Oh, but where did they sneak it in? Randomly at 2100 in the evening. All the 1 o'clock to 2 o'clock was a lot of consolidation, a slow move, closing out the rest of the day. But guess what they don't change, and guess what they almost can never change? This 9:30 in the morning. That's when the market opens. That's when all the orders come flooding in. Boom, we get the move. Boom, we get the next 15-minute move. Boom. And then look at that. Look at that 4-hour random line that I just put in there. That was a high at 10 o'clock before we pulled back and broke out further. And then where do we go from there? We trended all the way up to the next high that I set up off of just the beginning of this video, setting up those random times. We have almost the entire market move from yesterday. Goes from the 200 EMA, broke down a wick through, because you always have a level lower here. So you start moving your way backwards and you go, okay, cool. The 445 candle is the controlling candle, but let's go back to when the market actually closed. This is the 130 there. Let's draw a line on that and the end of that candle, and it'll show you exactly where you need to go. Right here, 10:45 in the morning, 10:30 in the morning, boom, split. Right here, 12:30, when the afternoon session comes in and it starts trending up, you get this manipulation to the downside as the market closes out, goes right back in, we bounce up, stay below that line, get up to it, strong resistance, pushes back down to where? All the way down here, 9:30 the next day, we pop up off of that line there, and it's all here already. It's already in the charts. You just have to know where to look and when to look. When is more important than almost where at times. The 4-hour time frame is what's going to set you up for the great trades. The when to look is what was the previous day's high and low. It's not going to play out exactly like you think. Sometimes it's going to split down the middle like this. This is 9:30 and 10 o'clock, right? 9:30 was a downtrend, pushed up there, trended all the way down, fell down to the 200 EMA for the 15-minute, hit that 200 EMA, bounced off, went up 50% of this candle. 50% retracements happen all the time as well, but you look at the 50% retracement and you actually go, what number does that hit? It hits 250. Why does it hit 250 and then reverse a little bit? Because people automatically come to these points and go, I'm gonna set my order at 250, I'm gonna set my order at 300, I'm gonna set my order at 280, I'm gonna set you have a whole number in mind where you want to set your orders. People like nice comfortable whole numbers. They like 100, they like 50. Like, even when I set up my trades, I set up my trades by the $100 because I like whole numbers. It's automatically programmed into us to like, well, nobody wants a 9903, nobody wants an 8721. Like, that doesn't feel the same when you get it. Like, I'm looking at 446.56 for my amount of money that I have today, and I automatically want 450 or $500. So when you start trading and you start looking for these things, do what you would normally do, what your thought process is, and then just apply that globally. How many people are interested in this number? Where does the market want to go? And to find where the market wants to go, you have to come to the higher time frame, because they'll show you there. The market is struggling to get past 50 right now. We're at 49. And just like I said, people are going to set their orders up at 50 to reverse, right? So we're going to zoom all the way onto this candle right here so that you guys can see the top of it. 50's right here. All the orders sitting at 50, just keep pushing it down a little bit, pushing it down a little bit, pushing it down a little bit. And that's why the struggle to break that area, because there's such a large cluster of orders. You guys call them order blocks. If you move to the left, there's such a large cluster of orders right here, from right here 57 to right here 44. All of those orders that normally happen again and again and again are going to repeat the pushing back. Now, you won't always get where it's a full reversal, because right now we haven't reached the level that they're actually looking to reach today, which is closer to up here. You won't hit the full reversal, but once you do hit those levels, just like you did here, that's when you get those massive plays to the downside where you get a $100 move or you get a $200 move like this here. We hit this level, we get a massive pullback, and then we finally go our way back up and we stop right back at that 40 again, and then we break out heading towards the 80 point, which stops right here. So this is 80, top of that candle, and then they break out past there and they go to the next point. But it's always some even number somewhere along the line that people are like, I'm gonna set my trade up at. And I just learned to read that. Like, that's as simple as the market structure got for me. I started out trying to learn all the technical terms, the change of character, the break of structure, just like everybody else did. And at some point I was like, it's not serving me the way that I needed to. What is the market doing? And once I asked the question of what the market wanted to do, I started taking great trades. Not hey, B entries and C entries. I'm not even 8-inch. I'm talking about, I know where the market wants to go. I'm gonna go there, and I'm just gonna sit and wait. I used to scalp all the time. I used to hop in market, hop out real quick, get a couple bucks here, get a couple bucks there. Now I sit a price. You see 219, you start to see the trend of it, really. 219, 139, This particular one was 36 because that was just an odd one. 898 because I'm expecting it to go up to here, and it did. It did reverse, but unfortunately, sometimes when you lock in money, it'll wick back to you sometimes, and then you just end up with a small trade like that. So that's why it's only $12 and $12 and $7. Same thing happened for all these. You go to lock in just a little bit of profit to make sure that you never go negative, and then it wicks back and you lose. You get, well, you don't lose. You get a smaller trade. But there are times like this where you let it run for 14 minutes, 13, and even with the 13-minute, you don't always get a big trade. But green is green at the end of the day. Green is green. It'll all count towards making money. We have 14 minutes to 9:30. Let me finish drawing out a lot of this chart here. So at a glance, you just start going to the places where you see it happening the most, over and over and over again. Places we just keep here and here and here and here and here and here and here. No matter how small my chart gets, I can see it. I can see the bodies of these candles. I've trained my eyes to see it. If you need to see it a little bit bigger, boom, refresh it like that, stretch it out some. But you need to see the previous week's worth of candles as you work your way to the right. Start with the bodies of the candles. We'll work on the actual candle wicks shortly after that to clean things up. And then I just click this plus sign here, blue horizontal line, plus sign right here, blue horizontal line, plus sign right here, blue horizontal line, and then a plus sign at the top of the two candle wicks, blue horizontal line. And you start to see the actual play. So we marked out these two candle wicks right here. You zoom in, work your way backwards, and you see it. Oh, it was a strong level of support here. It was a strong level of resistance here. It was a strong level of resistance here. It was a strong level of resistance here. It was a strong level of support there. And you're just working your way down through all of those strong levels of support and resistance at a glance, just marking them out, and you start to see how the market works. We almost always cover the same moves. What I focus on is, where does it happen the most? I don't mark every single 4-hour candle. I don't mark every single 4-hour candle wick because they're not as important as the ones that are happening so frequently that they look like a cluster. That's a 69, so let's say that's a 70. Mark right here. You go down, mark these big lower lows and lower highs. Mark those out, mark these out, mark this out, and at some point in time, it will line up for you. You need to clean it up, grab that little circle, and just slide it wherever you need to slide it to. At some point in time, it'll line up for you. This particular candle wick right here is important. It's at a 60, but it still lines up with exactly what we're talking about. And you'll start to notice that the candle wicks in here, the manipulations, even the manipulations have rules. The manipulations fall within a certain zone. They fall within a certain range. And by marking out the bodies of the candles, you'll find the range that they can manipulate to. Instead of following and like trying to trade the manipulation itself, this candle right here is 316. Right? Remember this candle right here. This candle is from June 16th. Let's go. All of this right here from June 16th. Over and over and over again, the same area there, right there, all the way here, became resistance for us later on down the line. So these 4-hour candle bodies matter more than anything else in the charts. So you're working your way down, you start marking out more. You'll start to see how the actual market came together. Way backwards, you're looking for it. This gap right here, important gap. We gapped up Friday night to Monday morning, or Sunday, which is technically, we open up Sunday for us, so Friday night to Sunday, but look at that, it went almost to the $100 mark exactly. So I would be within that. I'd be at like 30,098 at some point in time during this trade. So here, you got this little mark right there at 60. So here, you got this little mark right around the 30,000 area as well. All of these little candles are telling us a story of what the market wants to do going forward. Now, for the S&P 500 is already broken out. They've broken their all-time high. Let me see if I can pull up SPY on here. I think we can now. S&P. Okay, whatever. The S&P 500 has broken the all-time high. It's currently sitting at $760.35. It's been higher than that today. It's heading for that 761 to 765 area. We have no historical data, so whatever the normal parameters that they go are. Let's say we go up to 761.20, we go up to 762.20. Whenever they decide to stop this thing, we'll have to retrace to about this point right here, 756. That gives you a $4 window, but right now we're up $300. We're up $10 on the day yesterday. We're gonna go up another 3 to 5 to start the day from yesterday. Yeah, $3 already, breaking the all-time high. However, the cool thing is the Qs, we still way down here. We got all of this room to move to the upside, so our stock can still go higher. We still have to hit 750. With that pullback to this point right here on Wednesday, July 29th, stopping everything, and then just all the news just turned it around and just pushed us right back up this way. So now we're at a 50% retracement of the overall fall for the Qs, and we've completely retraced it on SPY. And why is SPY going when the Qs is not running? Because it has 500 companies in it that aren't just tech versus the 100 top tech companies. Tech took a major hit in the market, and it's more slower to gain back than a lot of the other areas are. However, you have Nvidia, Apple, and Google and Microsoft driving the market right now. Microsoft had record earnings. They did great with AI. Apple is a supply and demand company mainly, so there's always a huge supply for iPhones. They're integrating AI into their cloud service now. You have Google, who's one of the leaders of AI right now. Of course, they're doing well. And you have Nvidia. They're making all of the chipsets and everything for all these computers that use AI. So of course they're doing the best. They're valued at 4.7 trillion. Apple's valued at $5 trillion, up from like 3 trillion a year ago. So that's what's the main drivers right now, is we just had earnings for all of those companies. And then we have news on top of news on top of news driving the market. We have mom today. Oh, look at that. Look at that. Let's see if we get a little hit here. So we're risking $100. We're closing in on my entry. We just hit 50. What time is it? It's 20 right there. We're going to lock in a little bit of profit here at 10. We're going to see if we can get a... Oh, no. I didn't mean to do that. I did not mean to do that. I closed it. So I closed the order instead of sliding it, but it's fine. You see how it hits and then it retraces a little bit. That pissed me off. It hits and then it retraces. I was trying to lock in at the $100 point, and I ended up closing the order at like $10, and we got the $100 right there. And then this point right here is $500, and we're halfway there already. So we're at 250 right now, and I'm not at 250. I'm currently sitting at a $7.50 trade because I closed my order by mistake. But you guys see how my orders work. You guys see how it works, right? There's a goal that the market wants to reach. The goal was $280, $29,280. We get there, we enter the trade, and it immediately starts pulling back. Why? Because everyone is sitting their orders right here, based off of this time over here. Rather they're studying the 4-hour time frame or not, they have a mental picture in their head of what number they want to sit at in order to get their orders to go off. I am perturbed right now. It worked so perfectly, and I wanted so much to show you guys exactly how it flows. It goes to $250, and I closed out at $7.50 by mistake. Anyway, clearly you guys can see that it would have been a $500 trade. Unfortunately, I am not in that $500. So now I gotta go, this candle body, now I gotta go, and I have to set up another trade. I don't have to. I'm good with $447. But I would have to go and set up another trade in order to do the capture thing. And this is honestly why I don't live trade, because showing people things and talking and stuff like that and trying to do this stuff at the same time usually has this happen. But we drew back to the 9 EMA for the 1 minute. That's a quick $400 right there that I don't get to have. Yeah, it's fine. You know, all I would need to do is get to the 23 right here. The 23 EMA is a $500 trade. This point right here is, let's see, 80 to 80. This point right here at the 200 EMA is a $1,000 trade. And as you guys can see, we're breaking down towards that, pushing off of that 280, going towards this 23 EMA. That gives you $500. Dang it. I waited so long for that trade too. I waited all morning for that trade. We've been drawing up since 5 a.m. I've been waiting to get up here. We hit here and I jank it up. But The cool thing is you guys see I'm right. That works for me just fine. So mark out that 280. We're going to go ahead and surpass that going up to the 341. We will mark out the 280 if I can get my finger to that button right there. And sometimes that is why I won't even lock in. I'll just let the trade play out. A lot of my better trades just play out. Whatever. Close enough. Go look for our time frame. That is close enough. Go to right here, 77. Next level is almost 300. Right here, 90. See, I split the difference. I set myself at 80. I know the next level is 90. It went up to directly between the two, and then drew down to exactly where I wanted to take profit. This is a lovely thing to watch happen with no money going on the screen. But you did notice that I didn't immediately just jump back in based off of that. You guys see, once we hit $30 here, that's a $500 trade. I didn't jump back in because there's up and down movement now. Once you miss that initial push, you are at a greater risk to lose that trade. So that's where the entry levels come in. That's where the A trading and B trading and C trading comes in. You guys see that my entry price right here was at 278. Why? Based off of these. Okay, 277 is where I mistakenly got out. I was literally just trying to go and lock in some profit real quick just to make sure that it didn't have an opportunity to go negative in case it shot up here and decided to wick out, because you cannot 100% predict what the market will do 100% of the time that your trade is going. Okay, all you can predict is that, hey, there's going to be a move here. You can surmise how long that move will be, but you can't with 100% certainty say that it will. So you do want to lock in some profit. You do want to be green. You want to get as much of it as you can out of it. You know, unfortunately, there's a heavy cost to using more than one contract. You see right here with one contract or two contracts, my commission fee is only $1. It's $2.50 with the 5, and the fee to actually execute the short is $3.60 versus the 2, it's $1.44. So the more contracts I use, the greater the cost it is to me, the more of a move I actually need to secure. So by closing out at $7.50, I get like $1 out of it because of the commission fees for the extra contracts that I put on there. And then here we are hitting my $500 goal, and I get $7.50 and have to pay $6 out of it. You know, which is crazy work, by the way. Commission fees are crazy work on live accounts. But it's cool because I wanted you guys to experience that aspect of it as well. I'm glad that you were here to see that. We got another 4 minutes before the market opens. They send a little further north. Let's see where SPY got to. SPY's at 760.82, so it's going to make it to 761.20 here before we get like a little rejection. We got nothing, no data in the past. So this is a very dangerous trading moment because at any moment, there could be a major company sitting at 762. There could be a major company sitting at 761.50 who's going to buy 50,000 contracts. And 50,000 contracts will shoot the market from here all the way down to this candle in a couple of seconds. You know, we don't have the type of money to move the market in the way that we would like it to move. However, we can pinch off of these major moves. So all of these 4-hour candles, these 4-hour moves are the same way that a large company trades. A large company is not going to risk a large amount of capital at a whim. They're going to want a strategic maneuver. They're going to want a certain level. Hey guys, when do you feel, you got 30 board members, when do you feel we should go in here where we can move this market the most? All right, let's set up at, I don't know, 280. I think a lot of traders will want like $300. Let's set up at 280, cut them off, and then we'll run the liquidity from there. We'll get our $1 million, $2 million, $10 million or whatever. And then we'll close that out. Let's say at about, we'll sell off at 30, 45. You know, hit 30 just like that, $500. Where am I at the $500? $7. I just want you guys to know that. I want you guys to know how perturbed I am. Be here with me. Feel this with me. That's annoying. It's annoying to nail a trade and get no money out of it. But anyway, moving on. Does anyone have any questions who's in here? Because I've been talking for a minute now. It's my 2-minute warning right there. Any questions?
I don't have any questions.
A lot. Thank you.
Yeah, I was gonna say I don't have any questions. I'm gonna have to check in with you again just to see how you do your levels. That was interesting to learn.
Levels.
And I like what you say, how the market continues to go back to the same places. So I want to get more familiar with that.
What's cool is you saw it though. That's the dope thing, is that even if it's not 100% accurate, even if it's not exactly 278 my entry, there's a level there. We're at $50 move now. Okay, the market every $50 is 100 times whatever you put in. A $50 move from the time of my entry to now in just 5 minutes. And that's how you get your money. You don't have to hold all day long and get the most out of the market. If you can just find a little area where you're like, I'm pretty sure, not even 100% sure, I'm like 60% sure this is what they want, you get paid. And it's the one of the easiest trades you can take. It's not drawing out trend lines, and reading a trend line and seeing where we're gonna have confluences. It's just basic market structure. What is the market looking like right now on the 4-hour time frame? What do they want to do? Where are they going? And you start looking to your left and you're like, where do we keep going again and again and again? And then you ask yourself, why? That's where the money is. That's my demand zone. That's my supply zone. And you have a much greater opportunity. Hold on a second, because we about to market enter here for a second. It's MNQ2, and we're gonna risk $60. I would very much like my last $40. 400. It's too late. It's already past 9:30. Anyway, but look at that draw up. Go to the 1 minute time frame so you guys can see that nice and clean. Look at that. Almost a full $100 move, drawn right back up to the zone and breaking out from there. That's a beauty. You make this nice little N shape where it draws down. That's how you get your breakouts. You do that a lot. You'll make that little N shape and it'll get its breakouts. There's the breakout. And to where? The next level. Next level has some rejection, and then it's gonna move on to the next level. I'm sad. I want some of this money. I avoid market entering because my market entries don't agree with how I trade.
See, I have a question about that.
Yeah.
So once it goes up to the next level, right? My thought process is because it's been rallying so much, it does have to pull back. Why am I not thinking that it's just going to continue to run as opposed to pull back some?
It depends. So let's go to the higher time frame. Look at the 1 hour. You have all of these orders here, all these order blocks in here in the 1 hour time frame, right? You hit the 1 hour order blocks, it's got to pull back off the 1 hour order blocks for a larger amount. You'll see we get a smaller pullback when it's a slow draw. Like if we're just, all of this slow movement gives us the ability for a much larger move off of all that pullback. So you get slow pullback, comes to the level, starts to rise up, shows us the preview that we're going to break out, and then we break out to the next level. Now at that level, it depends on how strong the order flow is. If we've been running all night long and they're just waiting for us to hit 350 or 340, when you hit that 350 or 340, that's when you will see that large sell-off. Now, if we hit that area, we pull back to this area right here and start bouncing, you have that opportunity to continue. So you pull up, pull back, you get the 50% retracement, you don't break the 50% retracement, you hit the next line, you reject off that next line, and we pull back some, and they don't go all the way down the candle, we'll get the continuation from that point on. But you see, we went from level to level. Always from level to level. 50% pullback, trying to see if they're going to draw back up here, but the level is the same. And then this is the trick. This is why I always get in $1 early. $40 is the actual level. $39 is where it reversed. Why? Because everyone's orders are sitting at $40, not $39. So you have to get underneath the orders. I trade underneath the order. So you break out, like I said, 400 is the draw on the 4 hour time frame of where they're trying to get. You get to this right here. This is another area where it should have a little bit of a snag at 60. They're looking to get to this 400. But look at that candle. 6 o'clock in the morning, from 29,000 to 29,340 before you start to see the reversal. And why you see the reversal? Because of the order stacked here. But these two candle wicks, this is when the candle wicks become important. They become a draw. They draw the market further. That manipulation that was a manipulation before has to be validated as a real market structure now. So to make it a real market structure, you get the breaker structure. Once you break that level, to make it a real market structure, you come and you equalize to it, and you have your high set right there. And then you have these areas acting as a draw as well, which is why the next level is just sitting there instead of coming down to this point right here. But you see it, we hit that level, we draw back again, we go to the next level. But that draw has to happen because it happened previously. You have to clean up these gaps in the market. All of these candle wicks, and this is the importance of the candle wicks, all of these candle wicks have to be cleaned up. They're imbalances. These large candle wicks are imbalances. These candle wicks down here will inevitably have to be cleaned up because they leave imbalances. These candle wicks have been cleaned up. These candle wicks have been cleaned up. Now this candle wick is being cleaned up and these are being cleaned up. And we're drawing to the next candle wick, which is here at $397 or $400. So that's the next point where, like, let's say you wanted to reverse from there. That draw is why the market moves forward. Like, we see it as this. But the reality is that's why you use the higher time frame, because there is a goal. There is a legitimate goal for the market, and it's not all of this. This is a great way to take trades and make trades. So let's say you get in, what time is this? So you get in midnight. It's a good trade. It's a B level trade right here. You get into here, you get into the C level trades, and then you start pushing on from there. And a lot of people will wait for this breakout to take their trade, which is a late trade, but it's a good trade. Because it's 9:30 in the morning, the market's breaking out, we're heading to the upside, we're looking at right there, we're going to touch that line, and then you keep going level after level. It pulls back a little bit. If you look at the 1 minute time frame, all these little pullbacks go forward. They pull back, go forward, pull back, go forward. Like you were just asking, why do we pull back to a certain point? You pull back about 50% of the candle, and then you continue to move forward. If it can't take the full candle, it usually won't reverse. So this is a slow take of the full candle for the reversal, but they had a level that they were trying to reach. It's equalizing with this here from all of that consolidation, which shows you even on the 1 minute, there's consolidation. You pop off the consolidation. So you literally could just set your trade right there. I'm going to put a temporary blue line here. You literally could have set your trade above this consolidation here as an area to pull back to at 9:30 and then took it from there. And you would have had a beautiful trade. Instead of risking hopping in and then having it wick down on you. Look, we pull back a little bit, continue on. Pull back some more, continue on. It's going to continue this until we hit the point that they want. We're above 4 now. Go to the 4 hour time frame, find our level. Mark this right here, which is this candle body here. And then we're going to start working our way to the left and looking at, see if that's a level that's consistent. So we get a zone. Little drawing tool. That. Uh-oh, didn't mean to do that. Where are we at currently? Let's see our drawing tool. Bingo. Let's draw this right here. Zoom in a little bit. Run that back, run it forward. This is our current supply. Current 50% supply. We're going to try to draw up to that 50% supply zone. Start zooming out. You start to see why it's the supply zone. As you're way up here, so down here, you get that 50%. You get the much further fall down there. That's the market structure. That's the market structure. We just surpassed 50%. This entirety right here is the market structure. Click this little high boss that you can see it clean. No, I don't want it to come back. I'll temporarily remove these then. This box is your market structure. 200 EMA to right about here is 50%. You see that? That blue line there, 50% of the overall move. We're getting up there past that, so we're getting into the higher area where they're going to decide whether they want to pull back from this or not, or they want to break out for the next part, which is trying to get all the way to 30,000. But the first area for them to break down on the 4 hour is this right here. Exactly where we're at. You see it right here. You see it here as well. You see it here. You see it here. You start going backwards. You start going through this actual Fibonacci. I don't use Fibonacci, by the way. I just want to put that there so you guys can see the retracement. and you see it all right here. This is a strong level of resistance. But you have to zoom out to see the bigger picture in order to zoom in and take your trades. It's right there, starts pulling back. You're at 60 bucks. You get the 50 bucks. It's a $50 move. You get another 50 bucks. It's a $100 move. You take advantage of that on the 1 minute time frame. And it looks like little small candles, but these small candles are worth so much.
Mm-hmm.
Before I forget, I don't want to go back and draw all this all over again. It already takes a lot of time. And now you see where the reversal happens. So now remember what I said. If they can get the whole candle, it'll be a continuation to the downside. Pulls all the way back up to retest. Pulls all the way down to where? Now you need to get to the bottom of this candle wick. Pull down to that candle wick, pulls back up to retest, and then you go down a little bit further as time goes on. And then eventually they'll start to try to retrace this full move to give all of the people who weren't awake in the middle of the night like I was the opportunity to trade all of that price action. But they always do give retailers a chance to trade all of the price movement that we've had. But everyone loves 9:30. Everyone loves the 9:30 open. And like I said, every single day at 9:30, no matter what they're doing in the market, it has to have this happen. So this is something that you can reliably trade off of on a daily basis. And like, of course, for new traders, don't do the 9:30 to start because it's very volatile and it doesn't always go your way. You don't want to be blowing accounts up left and right. But I don't know. What y'all think? Should I lock myself out for the day or should I take another trade? I'm mad. I didn't get my $500, but at the same time,
And that means you shouldn't take another trade. I'm sorry,
fair,
talking to somebody with discipline.
fair. Look, there we go. We log out for the we good. But yes, the emotional aspect of it is very important, and that is something that I have struggled with for the longest, over trading because of things going my way, but not when I want them to go my way. Like $447 is great. It's a great day. I've already cleaned up this account from the $700 that was down in that one trade to $296. We can get another $400 trade tomorrow with 4 micro contracts. I can get a $300 trade with 3 micro contracts. All I need to sustain my trading, and I do it across the majority of my accounts, is I only need to be right once. You don't need to know what the market's going to do all day. You don't need to know how the story is going to end. You need to check in periodically to see how it's going to end, but you only need to be right one time for your trade. And that's the key. That's what makes you a great trader. I don't need to have an 80% win streak. I don't need to even have a 50% win streak, right? I just need to be more right than I am wrong. I need to have more of these $400 days than I have negative $100 days. You know, on the particular day that I got the $700 loss, you guys saw yesterday, I was over trading. You know, I got in, I missed 2 massive plays for like $1,000 a piece, and I was like bumping. I'm taking a trade. That's basically, I was like, I'm taking a trade. I'm gonna hit a trade, and then we're gonna see what happens from there. You guys see us coming up against the supply zone, and a beautiful rejection off the supply zone. We start to break. We'll go up to the blue line in the supply zone. And then we'll go from there and see if we resist off of that 450. They break the 450. We're going to go ahead and go past that 50% retracement of the market itself, and we'll see where it goes from there. But we're currently in the supply zone. It's a drawdown. On the 1 hour, so you guys can see a little bit more. And this is the current 50% supply zone that we're in right here. They're going to decide if they're going to break it, push up to the next level, 528, or if they're, I'm sorry, it's not 528 at all. It's lower than 528. It's right here at 510. See if they're going to draw to 510 and then reverse off of that. And we'll go from there. But we've already run so much all night long. Like these guys don't care. We hit that 1 hour, 200 EMA, pulled back to it, and they don't give a crap. They'll push it as high as they can get it. So you can greatly take advantage of these moves just by getting in the trend at the right time.
Your 528 level, where did you get that from again?
The 4 hour time frame, right? This candle wick. Going to the left. It's basically 530, but 528. I mean 509. The 530 is right here. This break of these candles. This candle wick is 510. Been in that area of 520 to 530 for a while. Then you get up to the 540-ish area. So all within there is a good solid area to look to push the values to. When you start to see more of these lines get closer and closer, you start to realize that you're heading towards a supply zone. So you see all of these trades getting closer and closer. That means you're heading into a supply zone. It's the place that was acting as a support before that's acting as a resistance now. See, we got to the tip top of it, like I said, off that 450, reversed off that 450. You hit 400, that's another $500 trade with 5 micros, $200 with 2 micros. You only need to be right for a small amount of time when you're trading futures, and that's the beauty of it. Look at that. We drew that drawdown is just wonderful. Get to the top of that trade. Let's say you're sitting at 450. It goes up to 453. You get a little nervous for a couple of seconds, and then you turn around a minute later and you're at whatever target you wanted. Get to this 400 right here, and you're at, look, the exact target of your trade. The exact reason you trade is to make a certain amount, right? Lots of people will trade the broad thing. That's $500 right there. Just off of just looking at the top of the supply zone and sitting at the top of the supply zone. $500. And you're done in 2 minutes. It doesn't have to be hard. We make it so much harder on myself, especially me. Like, I have a horrible habit of getting into my feelings with this trading game and doing stupid stuff and revenge trading. I've got like revenge trade days where I've traded 20 times that I was up money in, like this. Like, I've been up $500 and lost $1,000 because $1,000 is where they lock you out right here, the daily loss limit. I've been up $1,000 and lost $1,000. Like, I've done stupid things in the market that I've been training myself out of over the last like several months. You know, journaling everything, just generally being happy. Greed is really what controls all the emotions. Like, you can look at greed as an emotion itself as well. Greed is what's controlling all of it. The idea that I can get a little bit more, I could be at $1,000 or $1,500 or $2,000. I think the reality is that we're trying to replace a day job, all of us. But we think to replace a day job, we have to be rich. No, to replace a day job, you need to make day job money. What day job is paying me $500 for 5 minutes? If I go and work at Hyundai down the road right now, they're not going to pay me $500 for 5 minutes of my time for looking at a chart for an hour. They're not going to go, hey, Sebastian, go look at a computer for an hour, and if you can make $500 in 5 minutes. They're not going to do that. They're going to be like, get in there, work hour after hour after hour, and that's what we're trying to avoid. We're trying to get our free time back. And if you're trading to get your free time back, you need to really pare it down to how much do I need that, yes, I can keep my day job, because I'm not saying quit your day job. You know, Davon's in a very different position than the rest of us. But how much money do I need where I can sustain a comfortable living with extra expenses? I can take a vacation with money that I didn't have to work for 3, 4, 5, 6 months for. You know, I can be ahead of my bills and be comfortable. And that takes $200. That takes $300 a day. Add that times the 20 days a month. I'm talking about on average, averaging over the 20 days a month. $4,000 extra dollars. Is that not enough? If I get another $400 trade tomorrow, I'm at $800 for a 2-day period. If I do it a third time, I'm at $1,200 for a 2-day period. If I add $200 or $150, I'm at $650. If I do that, just consistently adding that $150 to $200 a day, you replace a day job. You replace a side hustle. And that is a lesson that I had to learn through trading. A lot of self-evaluation, a lot of evaluation of how the market moves. I started asking myself, how can I get exactly what I need? I need to make as many $500 days as possible, but my goal is not a $500 day. My goal is a $300 day or a $250 day. My goal is just to stay green and to build an account. You know, my first short-term goal is like build it to $10,000. From $10,000, you can add a contract. Okay, build another $10,000. From that point, you can add a contract, micros or minis, doesn't matter. But every time I reach a certain point and a goal, I can add a contract. And then through that, you'll get the bigger account. But not just that, you want to expand to more accounts. So I have 4 accounts. I have 5 accounts. Now that $200 becomes $1,000. But I train myself to be okay with $200, $400, $300, $12, $750. Doesn't matter. Green is green. If all you make today is $30, be happy with that $30 because another day you're going to make $300 because you had that extra $30 in your account to let's say wager. It's not betting, but let's just say wager because that's what we're doing. Our stop loss is a wager. Let's say you trade one micro and you're like, all right, $30 gives me a $14 window. I made $30 yesterday. Let's trade that $30. Market money, no risk to my account. Let's see if I can make $100 off that $30. You make that trade, you make $100. Now you got $130. You do the same thing the next day. You don't immediately jump up to risking that $130. You keep that same consistent risk for a couple of weeks. You find out that you're comfortable with it. It works well. You don't change the risk. You add a contract. And then you change the risk to equalize that contract. So you're trading $30. You added a contract. You go to $60 now. Let's see if we can make $200 off the $60. So you make $200. You sit right here on a pullback for the continuation. Remember, it makes that N shape before it continues, pulls back, goes the whole thing, and then continues on. And you sit here and you're like, okay, cool. I sit here, comes down, you're in it. Your $60 with your 1 or 2 contracts will more than survive a $5 move. And then boom, you get a $50 move in your favor and you've made $200. Rinse and repeat. Now this account is at, let's say, $3,000. You go take a payout of $1,500. You got $1,500 up to the balance. You take $300 or $400 and you invest in more accounts. Let's say you pass all 4 of those evals. And now you have 5 accounts doing that. And remember what I said, you get the N shape, you get the breakout. You get that pullback, it pulls back to full level, but it pulls back to a support, and then you get the breakout. This was a supply zone, now it becomes a demand zone. Now it's a support area.
Can you go back to your 4 hour?
Yes.
I just want to see your line. I can't. And can you go over to the left a little bit?
Right here?
Yeah, I'm just trying to see where your lines, where your levels are matching up with your wicks. I'm on MNQ too, so I was just trying to.
Yeah, so I start with body of the candle first. There are some wicks that are more important than others. Okay, so this candle right here, this line matches up with the wick because this is a massive wick to a level, to a prior level days back here, right? So here's the actual body of the candle from June 11th that matches up to that candle wick. But that tells you that this candle wick stopped right here for a reason. All you have to do is draw backwards, and then this line right here, can I change the color of this? Yeah, let's make it purple so we can see it. So this purple line, we're drawing back, hit here, okay? We're drawing back. It was resistance there, it's resistance here, it was support here, and then there's no time back here. Yeah. Oh, there's time back here. All right, cool. So we can get to go back further even. Support there. It's acting as support here. It's acting as support and resistance here. But you see, they're always around that area, which leads you to believe, like, okay, cool. Manipulation or not, that's the price action. Right here, those 2 lines become a supply zone of their own. It's such a small window between this area and that line there that becomes a supply zone of itself. Hence why you hit those areas and they have stronger rejections than the average area. You don't need to draw out every single supply zone because we're going to draw up to them. But the first supply zone that we just went through on the 1 minute time frame, we hit it, we pull it back $50, and then that allows us to break out and go towards the next supply zone. This starts acting as support. This starts acting as your resistance levels. Right there. But it all comes from the 4 hour time frame. And when you see like these larger candle wicks, I will draw them out as levels versus drawing out every single candle wick, because every single candle wick is not a level. Some are just manipulations. Like this little extra here, I don't need that little extra there. There will be a time where of course it will draw to that and stop there, or it'll drop here, draw to this and stop there. But there are better levels that you can focus on instead of that little bit of extra space. So this little bit of extra space on this candle wick is actually just this candle here. You see? So I realized that the bodies of the candle are actually more important than those candle wicks. If you can find bodies that are in agreement, let me clean that up a little bit. If you find bodies that are in agreement with these candles, you'll see that the candle wicks actually just go there. They're not, it's not what you think it is. It's not really price action manipulating as much as it is really quickly reaching a goal and then reversing off of that goal very strongly to give us these massive candle wicks. The goal was this. The goal is also this. That candle wick there, as you go back in time, is going to have plenty of candles that agree with it. down. This 395, $400. Remember, we reversed off of that. I don't have a line there, but let's just put a line there, 400. Here we are breaking out the 485, pulling back off of that, all that movement right there, get to $500, and then we pull back 20 bucks, 30 bucks. Now, I don't always like pullbacks. I prefer being in the trend. But the same thing for if I was getting into a level where I wanted to take a trade to continue on at. I want to get in here. 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 And I want to take those trades to the upside. So remember, the top of this was a reversal area. The bottom of this is going to be a reversal area or a continuation area. So a reverse off of that, pull it down. So now I sit inside of it. Boom, pulls down a little bit. I go down $5, $6, $7, whatever. And then we get the continuation. So it works for taking trades on a continuation as well as taking trades off the reversal. When I set up a reversal, it's across a very wide range. So you'll very rarely see me take a reversal off of like from here to here. I'll be sitting at an area that's really far off into the future, and I know that if we go all the way there, we're gonna get some decent movement for me to get my trade versus just taking any of these that pop back off of 500 to 470 or whatever. I wouldn't take that. I'm looking for within market structure on the 4-hour time frame. Where does the market have a lot of levels where it needs to hit and have some drawdown before it can go higher? We came all the way to the 200 EMA. We had the drawdown. That's actually a beauty right there. Came to the 200 EMA on the 4-hour. We had the drawdown to the next level, which was right here. All right, from 70, we went all the way from here to where we're at now. So where's the next level? Let's say we're trying to get to this candle body here at 530. That's the next level where we would have some strong reversal. We have some strong reversal right here at 560. I would go more to the 560 because there's more areas where we hit and hit and hit and hit and hit versus there's a few that we hit here. So yeah, there's going to be some reaction, but I want a reaction that's going to cover my entire trade. I want a reaction that's going to cover at least $50 to $100 because I want to comfortably get my trade, come back and see that we're below where my take profit was. I don't want it to go to my take profit and then immediately go, because a lot of times if it goes to your take profit and immediately returns back, you may not close out if it's too fast. But I like where we get to 500 and then we go to 550, the top of this zone right here, and then you go from there. You take your trade from there versus taking it from 500 and then just going to the 78. This first one right here. You go to the retest. Look at that. That's $100 right there. Pushing past $100 to the yellow line, the 23 EMA here, 729. But you get that reversal there at the 500, and you go to the $100 mark. I mean the $50 retracement. Takes us right to the top of that. Get us to the bottom of this. Remember, the bottom of this is an area where you would take a trade to the upside, like you did there. Now you look for it to break out to this point here of 20. But that right there, you're almost at $600. You're going to be at $700 when you hit the blue line. And instead of taking a market order from here, I just sit here at 500.
Now, do you think it's about to be 10 o'clock though? So do you think the next candle comes in and pulls back some more and then you jump in, or you just go based upon your levels?
You mean if I'm getting into a later entry? If I'm getting into an entry at 10 o'clock, you have to be very careful with 10 because the orders could fluctuate and pop us up first and then continue the trend to the downside because we're still in an uptrend. Remember I said the 23 EMA was the point that we want to hit before we start pushing up. So you set your trade right there at the bottom of this candle, goes to the 23 EMA. Now we're pushing back up to the upside. For 10 o'clock is going to do two things depending on what the day is. We have news at this 10. So this particular 10 is going to be very aggressive, right? It's going to be a continuation if we're trending and consolidating. It's going to go to a point and reverse heavily if we're like in the middle, like we are here. Like let's say we were just sitting at this point right here for a while. If we're trending and consolidating towards a downtrend, then it go ahead and breaks on down and heads back towards the 200 EMA or whatever the level is that it wants to go to, right? If it looks like this, 10 a.m. starts, we start pushing down. I go to 1 second because that's the only way I can show you that many candles doing it. We got literally 2 minutes. You'll see it. But we're trending down. The market's starting to pull it back. We're still in the uptrend. We're still pushing up. We're currently consolidating in the uptrend. Even though we pulled back off of this, we're consolidating in the uptrend to push up to the next levels. Just wait it out. Wait it out. That first couple of seconds, it'll probably be a drawdown hard and then a continuation to wherever they're going to go. But if there's enough orders just sitting right here at 500, they could just sell this thing off for as long as they want to. 10 o'clock is just a correction in the market.
Mhm. I gotta jump. I got a meeting. Sorry, but this was really good. Hope you do
Hey,
it again.
listen, it's recorded though, so you're good. You can go back and review it if you want to. But hey, good
Oh,
talk.
thanks.
Good talk. 1 minute. Let's see what happens next. You have a good day.
You too.
Hey, can I ask a quick question?
Go ahead.
Hey, yeah. So I'm new to trading on Top Step,
Mhm.
and for some reason my charts don't have the trade or the bottom area like yours do. Or the dome? How do I get that to
Do
show
you
up?
see this little add component side? Like, it should be like a little plus sign at the bottom of the screen. You go in there and you add your components to it. You pick what you want.
Okay. Let me go on my computer because I'm on my phone right now. I appreciate it. Thanks.
Yeah. No, go through it real quick. You guys see how that pullback goes? 10 o'clock hits, boom. We start drawing down towards the area that we're supposed to pull it to. But we were just at the 234. And this is why you wait out the first couple seconds of that 10 o'clock too, because it's a lot of fluctuations. And then there's a continuation of the pull down. And that's your correction. You need to hit this blue line and go to this one. It'll be a proper move. 60 to 410, 411, 70. Well, 73, even better. The 20, and then you got yourself a full $50 correction. Playing at 10, I wouldn't trade that. What news we have today? We've got mom. We've got mommy. For anyone who sees this video who is new to this is the month over month. That's what mom stands for, month over month. It's data tracks month over month basis for how they're spending in these factories and stuff. And then the U.S. JOLTS is the jobs report to see how the labor force is going. A good jobs report can positively affect the market. A negative jobs report, of course, negatively affect the market. And because there are a ton of people looking for work right now, it should be a positive jobs report. Layoffs actually beneficial to the involuntary job separation, or layoffs is beneficial to the market as well, which we know there's been a ton of those, especially at these tech companies. So you got a lot of layoffs, you got a lot of people looking for jobs. So unless you have a positive jobs report, which is weird to say that layoffs are a good thing. The jobs report, a jobs report is just an employment situation summary. It affects the market by shifting the interest rates. All my days I pray and pray. I don't want to eat that.
Hey, thanks for the help. It worked out.
Are you yeah? Are you what's your name?
Edwin.
Okay, yeah. You asked me if I trade on my phone. Yeah, I trade on my phone. Every day. But I set it up. I set it up on the computer, right? Just so that I can do it just like this. But you see how dope it is. Draw up to that purple line. Draw down this line here, and you just back and forth. You can just take your one little couple of trades or your one little trade and be done with your day. Like I don't have to get all of this. I just need a clean setup. So let's say A entry, say B entry. We hit the C's. And this is a C, but this is a good C right here. And I can just take the rest of that little continuation right there, or just sit at the reversal area at 500 and take that down to the downside. That's a great trade. You didn't get the full $1,000 that I would have been targeting, which would have been right here, but I would have just taken these 2 minutes worth of movement and take my $600-700. What I don't like about Top Step is Top Step doesn't have reminders. That's the only thing that's holding this back from being better than how TradingView used to be to me. I need my reminders, so I have to have TradingView up for the reminders. That ding sound you just heard. Ooh, so get my level. Oh, we hit 764. 765 is the level. We are killing it today. And the crazy part is, look at Qs. The Qs has so much further to go to catch up to where the S&P is right now. So the S&P making all-time highs, we're chilling. So we're gonna get dragged up eventually. And I can't wait. Look at that wick through. Look at that. Look at that breakthrough right there. That was a beauty. This slow chopping movement I wouldn't even mess with. But it's still doing exactly what it's supposed to do. It's going level to level. See all the resistance here. We're breaking out of the resistance. We're in the supply zone now. We're trying to break through the supply zone. Head up to the next level. All right, I'll start drawing out my 600s now since I'm done with this part of the day. I've been using the same thing for a long time, and I'm very accurate with where the market wants to go in the morning and in the Asian session. After that, there are a lot of changes that happen from like 10 to 11 o'clock. So I put the market in like 3 stories. Let's go to yesterday. Let's go to 9:30 yesterday. So let's say we put the market in 3 stories, right? Story number 1, you have the overnight. What's going on overnight? We draw up to a zone, we reverse down, all right? Next story starts at 9:30 in the morning. The market opens up for the Eastern Standard Time. Market pulls back to the zone that we had from the previous night, starts drawing up, drawing up, drawing up. Then you have 10 o'clock. 10 o'clock continues that draw up. We start hitting another level. From that point on, you have 11 o'clock. 11 o'clock starts reversing, but it only reverses to the previous levels that were set here. As you draw back to this candle wick right here. Randomly from 9 o'clock on Friday, isn't that crazy? 9 o'clock on Friday becomes the level for, what is this, Monday or Tuesday? For Monday. 9 o'clock Friday, that's the high, all-time high. We draw all the way down. We don't do the full breakout to the downside. We just draw down to this point right here. From 10 o'clock, that becomes your low. Then pull up, pull back to the high from 9 o'clock on Friday, from 9:30 on Friday, and then from there you take off. If you don't break that high from 9:30 on Friday to the downside, you're not going back down. So you know that. Boom, you get at that level, nice clean jump, and then it continues from there, and it goes to where? The next level of resistance. So the next level of resistance would be a previous level of support. So if this was support right here, boom, boom, support, and then you start going to the right, I wouldn't get in any of these places because this is resistance is here. This is all just movement. So you're just getting in randomly if you get into those places. So we're going to the right, going to the right, going to the right. Boom. That's the next level of resistance. We get up in there, we start getting choppy, breaking down, breaking down, breaking down. You say that we can't pull it back. Market just keeps going. Goes to the next level, to the next level. And then we have today. We got all this overnight movement. So day ends right here at the resistance level. We consolidate all night. We pull back to where? Back to right here. And then we can't break down into the 9 a.m. again. So we have more takeoff. Consolidating to the upside, consolidating to the upside, pull back, consolidating to the upside, pull back and consolidate, which means where? If you're going to consolidating, you're consolidating to the upside, you're going to continue to the upside. And we have, over the last 45 minutes, just been going. One zone after another. Each zone, it's beautiful because each major zone has its reversal, but then they get to the previous zone's bottom and they just go again. So that's how you know that you're going to have more continuation. We get to the top here, we have a reversal, previous zone, go again. Have our reversal, previous zone, go again. Have our reversal, we get to a previous zone, we go again. And it's all on the 4-hour time frame. We get to the next level, we stop again, start backing up. So are we going to continue on and go again? We should. We should go again until we're almost at 600. Especially with the jobs news. But you go back to the previous zone, boom, hit that previous zone. Beautiful drop. And then it goes again. But in all of this, did I move that? Back. In all of this, there's always a level that you're going to have a strong reaction off of. So if you want to go to the upside, you get into the strong reaction off of the pullback. If you want to go to the downside, if you have a bias that's telling you that it is a bearish day, then go to the furthest reaching point where you know that, hey, it's going to move for a while before it hits there, and then it will reverse off of that. So you go here. You go here. You don't go to like every single one. You pick one that's further off in the distance. Like I knew that after this whole move, there'd be a move here, move there, another move here, based off of the 4 hours. Looking at strong resistance right here, strong resistance right here, strong resistance up here. Off of all, as you look, lots of candles meeting that area. So I'm just taking those strong resistance areas and I'm taking my trades off of those strong resistance right here, strong resistance right here, gonna be another strong resistance right here and right here that I don't have marked out currently, but we'll mark out now. Just above 600. So because there's two purple lines close together, that becomes another supply zone for us to work our way to. But you get those strong pushes, and the beauty of it is the blue lines aren't all up in here. I would know that I was invalid or wrong if my blue lines didn't hit here in reverse and instead they were like all up in here and all up in here. That just goes to show you that the 4-hour time frame is running the show. No matter what's going on in the market, the 4-hour time frame is still gonna have respect on its name. Right here said, hey, listen, they're gonna respect me. Right here is like, they're gonna respect me. They respected me here and here. I was support here, I was resistance here. Okay, they respected me in the past, the next level is right here. I was support here, I'm a resistance here. I'm support here, I'm resistance here. I'm support here, I'm resistance here. So they're gonna respect those 4-hour levels again and again and again. And you just play it how you, whatever your bias is. If your bias is up, play it off of the pullback, or play it off of a clean setup where we pull it down, take it to the upside. If your bias is bearish and you just have to take a bearish trade or a reversal trade, play it off of a very strong level. Get your move and get the heck on, because if it's a bullish day like this and you're playing bearish and you try to play that all day long for a big old reversal, you're going to get burned. This is a bullish day. They do not give a crap about bearish action. You're getting bearish pullbacks. That's it. Pullback and continuation. 10 o'clock, we got the pullback, we got the continuation. But I'm about to head to the warehouse, guys. This has been a fantastic time. I hope you guys have enjoyed it. I did record it, so whoever wants to watch it, I'll put it up later on once I edit it out, because it's hella long. Been doing this for an hour and 23 minutes now. But this is a very good talk. Appreciate you guys for stopping by, man. It was fun. Glad I can make a little bit of money and get out of here.
Thank you. Thank you.
Yep. Thank you.
I'm still sad I didn't get that extra $500. I would have felt real good to get $500 on the stream, but you know, it is what it is.
Thank you. Thank you. Appreciate
Oh,
it.
good. Get it tomorrow.
Man, I appreciate y'all. Oh yeah. I'm a snag a little cash. You know, I'm trying to get back in the winning graces of the market. You know, QQQ
So
is forever,
Sebastian,
my
how often
lady.
are you gonna do this?
I'm sorry. How often am I going to do it? I'm actually going to do it a lot more often, because I'm working on going and becoming a live trader. So I'll be doing it more often. You guys are obviously the focus group.
Okay. And how will we know that you're gonna be on?
I'll put it on. I don't know what days I'll be doing, because I'm not always at my computer at this time, but I'll put it in the group and I'll tag everybody. So if you're in, just hop in. I'll usually be on for about an hour to like hour and a half, 9:30 to 10:30, unless I get on earlier.
And
Usually
what
I'll be
time
like
zone
8.
are you?
I'm Eastern Standard.
Okay, cool.
Yeah, I'm on the West
Alrighty.
Coast.
Well,
Yeah.
thank you.
When I say 9:30, no matter where I am in the world, it's always going to be based off of the UTC clock for the stock market. So the stock market is
Got it.
always Eastern Standard.
Yep. Got it.
But look
Thank you.
at that right there. There's another beautiful example of how these levels are respected. Over and over again, they respect these levels. We go up there, we draw down to the previous level. So that is how you know that the 4-hour time frame does rule what the market is doing. Again and again, no matter how much movement we have, these levels are respected. You get a little bit of a play out of it, and then we can continue forward. Now you have to start to read where the drawdown is too. So when it comes to drawdowns, I'll go over that really quickly. Drawdowns go to like the 80s, the 60s, the 40s, and like the 100 mark, right? So 100 mark here, continue on. Let's go to 1 minute. Let's see it. You got drew down right there, drew down right here, continue on. Go up to this next 40, so you get a whole $40, $45 window before they pull it back. Continue on. We drew down to that little 20 mark right there. Got more room to draw down to the actually all the way down here almost, and then you can go on. But if they're gonna keep pushing it like this until 10:30, which honestly be smart, because then they can just hard reverse it if they want to.
Ah, got it.
Yeah.
Well, thank you so much.
You're very welcome. These 4 hours are always respected, guys. No matter where you draw them up, where they go, they get the respect of the market. 4-hour line right there. And it would be different if it was like it wasn't in here. It's on it. The body of the candle is on it. The body of the candle is on it. The body of the candle is supported by it. It's on it. It stops, and then it goes to the next one. Over and over and over again. You'll get nice manipulations. You'll have all this stuff in the middle that you can ignore. But like even just sitting here, you want to get into continuations. You learn how to just sit at a previous level. This one already came down here to the 90 MA. You sit at the purple line just above it, and then you take a continuation on, and that's $40 in your direction. And now you're in the trend, and you see how far the trend will go. So like how I would lock in profits, I should teach you guys that as well. I did 2 things. If I'm off of a reversal on the market move, I'll lock in a little bit of profit immediately. That's where you get the $7 from or whatever. Just to be inside of a line in case there's a massive wick or something like that. I want to make sure that I locked in some profit and don't go negative. But in a move where I'm continuing on, I'll wait for the initial test. So this is the first test. And then I'll sit at this level for the retest. So now we're up here. We've broken out a little bit. We know that they want to trend up. I sit at this line for the retest. I sit there. As we approach this line, I lock in profit as we get above it. So we're starting to trend above it. I'll lock in profit. I don't know if this is drew down to it beforehand or afterhand, but let's say it drew down before we get above that line, and now I'm in there. So now I'm in all the way up to this point right here. So now I've got this full move from 14 to 45, and I set here. So now that we're starting to reverse this trend a little bit, I'm going lower and lower with my entries. So like I come down to 500 as a place to bounce off of if I'm trying to continue the trend to the upside, because I want more and more of the money. So after you retest, you break out. You retest, break out to the downside. We retested up there. We couldn't go up. Couldn't make it up there. And look what we just did. Just touched that line, and we immediately started going back up. They are going to respect it every single time. And that's how you're going to get your money.
Wow.
In that 1 second we touch there, you're sitting here right back to this line, and let's say you just said I'm gonna lock in here and I'm immediately take profit to that line, right back to that line, and then continue the reversal. They're gonna respect the 4-hour levels, and I love it so much because it's just simple, clean market structure. I don't know terms, change of character, break of structure, fair value gaps. I don't do none of that. I don't have listen, my problem with options trading was the Greeks. When I got rid of the Greeks, I promised myself I was not having a hard system anymore. Theta was destroying me on every single trade. I would be winning trades like this all the time, and then Theta would just sit there for like a half hour of consolidation, just losing money, and then not being able to get it right. So when I came to futures, my entire thing is something that JT, I don't know if you guys had JT or Taryn, teach you guys. Look at that move though. Look at that move. Right there to right there. So clean. Teach you guys market structure. Well, she called it supply and demand, right? When JT taught supply and demand, later on that will become my entire system, because Davon's market structure teachings confirm what she was already talking about, but gave me a cleaner picture of how to read the market structure. Like I said, you sit yourself on a line, you're sitting at 514, you get a free trade for $30 before it comes back down to you. You don't have, let's say I had like 2 micro contracts in here. I'm trying to make $100. You're going to clear $100 immediately. You're risking 50 bucks. 50 bucks going to put you at this line, which is the next line that it goes to. You risk 50 bucks. Boom. Goes up. 25 bucks right here. You're in your $100 trade. Look at that. Came down there, respected, went back. Now the market wants to retrace. It wants to draw down. So eventually we'll stop respecting as strongly and we will just draw down more quickly. But we have to draw back in order to get more liquidity. There's all this liquidity to the downside, all the way through here, all this stuff, at least to this point right here, that we can take back. So they're going to just keep on bouncing it and seeing if they're going to reverse the trend. It is 12 minutes to 10:30. 10:30 is usually around the time where they really decide on the new trend. And then they'll take that until 11 o'clock until lunchtime. But you see how brilliantly it is. You just sit at a level and then it's right back to the level. And then the further away your level is, the more money you can gather in that trade. So if I wait for the pullback to here, and let's say there's a strong pullback to 586 and I get in there, now I've got this entire candle body to here that I can take for a $50 trade. I'm looking for a $50 range preferably over a $30, $20, $25 range. I'm not quick scalping as much anymore. I'm looking for the larger range now. I like personally if I can get like a full $100 right there. Now you see how they manipulate it, but look at that. You're still safe. You're still safe and you still get the move. Isn't that brilliant? You're here on this line at 500. They manipulate it to 98 and you still get a $20 move in 3 seconds. $25, that's your $200 right. That's your $100 right there for your 2 contracts. For 2 micros, and all I had to do was sit at a pullback, because these are still currently pullbacks. We haven't started a brand new trend yet. In the next, what time is it? The next 5 minutes we'll be in a trend. And look at that, look at that, look at that breakout. Beautiful. Look at that. I told you they're gonna start just disrespecting and just breaking out now. You get to read it so well that you know what they want to do. You start to be like, okay, what do they want to do? What I say, we're gonna come down here. And then we start working our way back up there. So this is the next area that they respect. But this is the actual level right here that they need to get to, which is at like 80. So normally 80 is the bouncing area. But you don't have to take all the bounces. You don't have to take all the trades. You just need to be right 1 to 2 times a day. Snag 100 here. Snag 100 there. You know, if you get a really big move, like if you're sitting down here and you get the full $100 move, that's super duper dope. You know, you're at the right spot, right direction. Take the full move. I prefer being in the trend. You're going to get a lot more money out of the trend. The trend is your friend. Then you're going to get off of playing like reversals. But when I do play a reversal, it's off of a very high level like this where we're going to get a big move to the downside. So now 45 to here. We get all the way down to this point right here, and we've got a full $100 move. And I've got like, if I got 5 micro contracts, $1,000 trade. If you got 2 micro contracts, a $400 trade. You start doubling up your money off of that. But the levels will always be respected. They may violate and wick them out and stuff like this, but you're going to get an opportunity to take your trade where it's supposed to be. And here we go. Look at that. We get down there again. Respect the levels. They always respect the levels. Even for 15-minute candles and 5-minute candles, they'll respect the levels. But I go off of the higher time frame because that's more movement. This to this is much more movement than this to this right here. You know, that's a considerably larger day. Yes, it happened and you get the move or whatever, and it's real quick. That's a nice scalp, but I'd rather have my $50 move so I get my full contract's worth of money. You know, because it's hard to get these trades to work perfectly over and over and over again. Regardless of how I understand how to read the market, it's hard to get it. Like you see, I fat fingered a $7 and a $7.50 trade. It's hard to get them to work perfectly every time. Regardless of if you get the perfect entry, an A entry, you might have an A entry with an F exit. You might have a B entry with an A exit. So it's hard to get the perfect trade, but if you understand the levels and the market structure itself, you have a better opportunity to at least get a positive trade. You know, I'd rather take a 750 day than a negative 750 day or a negative $100 day, but you see, we respected the level. Like I said, we came here and then we went where? The next level, which is right here. Push back down, respecting that even. So even on the way back up, as we're starting in reverse direction, they respect the levels back up.
Yeah.
You know, but now we need to be changing trend, start drawing down. If they're going to run, because we already made it $764 on SPY. If they're going to hit that 765, they need to start reversing trend. $5 was what I surmised when I woke up this morning that we were going to do, and we're almost there, if not there. I'm going to keep zooming in so I can see it. We've surpassed the $5. We went to 5,743. So this is the new market here. So now you have all of this space, $5 worth of space, honestly, about $8 worth of space in the market for the market to move back up and down through. But they're going to want to keep this at a positive day. Meta is struggling. Amazon is struggling, but everything else is super green. Nvidia is still pushing up. Like, Nvidia doesn't pay as much, I hear, because of the stock split, but they're still a $4.7 trillion company that moves the market, so it's still good to watch them. But even with that, the market reversed at 765.40. It's 765.40. The even everybody likes even numbers, even to the cents. I started seeing that. I started seeing that play out over and over again. That's how I initially started trading, even on the future side. I would keep this up because I'm watching the cents over here on the SPY. I still use SPY as my main focus point of how to trade my stock, because NQ is only 100 companies, right? SPY is the heart of the market. The S&P 500 is the heart of the market. What the S&P 500 does, we will follow. Regardless of what QQQ is doing, the S&P 500 has a stronger move than any other market cap out there. So what they do, we follow regardless of what's going on. And that's why I watch this. So they're starting to fall down. They're going to fall from this 20 down into like 763. That'll drag us down through here. That's the reversal of the market. We have 6 minutes until 10:30 for the market to be able to continue to pull back to this 450 area. Over here it's minutes, but it's hundreds of dollars in just minutes. Always respecting a level. This candle right here, this is a 1 minute candle being respected by this pullback. Always respecting level. But even on this 1 minute candle, you can find a 4 hour candle that will say that, hey, this is a level. 490 is a level. 500 is a level. You know, they're respecting levels the whole way through.
Interesting.
Yeah, that's it. I mean, for the most part, that's all I can teach you guys. I don't have all the technical terms and stuff like everybody else does. Like Davon, Joe, they all have all these beautiful techniques and structures. CVAS, beautiful techniques and structures. And I love everything that they teach is correct. But there's 1,000 ways to skin the cat. And I just found that my way worked for me. So I'm going to the classes now, which is why I'm called Back to the Class Bash if you guys are looking for me in the chat. I'm going to the classes now so that I can learn more, because I want to be able to teach. And I feel to teach, you need to know everything. But my style of trading is very simplified. We get all the way down here to 82. We go all the way up to 45. That's plenty. That's plenty.
Yeah.
3 minutes of your time, maybe a couple of hours of watching, just to find an area where, okay, listen, where are we pulling back to? We're in an uptrend. Where are we going to go that's going to give me a move that's going to give me some money? So instead of taking the first one here, let's say I come down here because it's right above the level, but it's a candle break right there. I'll just put my trade here. If it pulls down to the level, I'm safe. It's a $4 range, right? But I'll be right here at this candle because I feel like that's going to be the point. We hit that candle. We take off for a few minutes. You walk away with a couple $100. And that's off of a pullback retest.
Wow.
From that fast drawdown where you're like, okay, we're starting to draw down, where do we go to? You start asking yourself, where do we go to? This would be like a first level that you look at, but then you want to get, a lot of times how the market moves is it's the next closest series of candles. So this was the first candle we had already hit. The next closest series of candles in the upwards trend will be this candle here, which will be the break there. So that's the one that we hit. This candle here, it's further back. It doesn't currently matter in the current trend that we're in. The current trend that we're in are these candles right here. These candles that used to act as a resistance will now be acting as our support. This is the first candle on it. So this is the first candle that I would place my trade at. And we went to where? The resistance, yet again. We're trying to break out of the resistance there. We should have enough momentum to break out of the resistance with like another 20 cents on SPY over here. We should be able to break out of resistance. Once you start getting above the 60s on SPY, if there's not like a hard sell-off, you start going up in the trend. And that takes us up in our market as well. And then boom. Now you see why I look at SPY. SPY said we're about to break out of the resistance. That two cents right there, those two numbers, told me we were about to break out of resistance. We broke out of resistance. SPY is still running the market. Even though QQQ is its own stock, SPY is in charge. There are days, very few, rare days where they will move individually of one another, but that is very rare. We are controlled by the S&P 500. It has more of a market cap. It has a stronger pull. The S&P 500 is the high candle wick. It's the higher time frame. But that right there, that literal 10-cent difference, right? That 10-cent difference was a $30 difference on our stock.
Wow.
The 10-cent difference on the S&P for EMS, MES, it's $1 over here for the 10 cents over there. So every 10 cents they go over here, they go $1 over here. I haven't traded this in a very long time, but that's the same parameter that I used to use to trade that. But look at it. For some reason, my side-by-side hasn't been working, but let me see if they'll let me do a side-by-side of these two today. Try to get an MQ. Yeah, they won't let me do. I don't know why the side-by-side's been messing up, but they're exactly the same if you look at it. They're the same.
Oh yeah, MES.
See,
Yeah.
remember earlier I was talking about that little N-shaped pullback that starts continuation, consolidation, continuation, consolidation, continuation, consolidation, continuation. Now for the reversal. Now we hit our high, we hit our goal, we start reversing off of that. You know, now they can start cleaning up the gap to here or the gap to here. They start cleaning up as they make their way back to this 200 EMA, back to the consolidating areas. And it is officially 10:30. The trend has started to trend back a little bit. They're starting to pull it down. And then you come over here and you see that we're at 20 cents instead of 60 cents. And you see the fall off. Those two numbers right there have led me to so many great trades. We break 60 cents and we start moving towards the upside. I'm like, okay, cool. We might get a little bit of a breakout here. Let me start looking for a place where I can enter a trade. Enter my trade, boom, takes off. We start pulling back towards this 30 area. We know that we can get a flush out where they'll sell off to like 763, 85 or 90. That means that's a decent sell-off to get us down to here. I can hop in the trend and ride that sell-off towards down there. You know, that's not a strategy that I like to use, but when I use market orders, I will do that.
Okay.
So like, I'm locked. I was about to take a market order just to show you how it works, but I'm locked out for the next 9 minutes or so. But that's it. You know, I don't want to stay in here because if I stay here too long, I'll start fooling around and might lose some money.
Cool.
No, we don't. Money because when you watch money move for a long time, you start getting antsy.
Don't want that to happen.
You see, look at that. We're at 19 cents here, 20 cents. So they're gonna start to draw towards that next time frame. Start to draw towards that like 80-ish area right here. And then they'll draw towards the 40 area. They get to the 40 area, we'll start pushing down through this candle. They're trying to hold it up to get all the way to that 765 again, but it's time to clean this up. I don't know if they're going to leave this gap right here where they have the break of structure, but if they leave that gap there, we're going to have to come down there eventually to take care of it.
Yeah.
Still got 3 more days in the week. Let me see if we got any more news on the horizon. So this is where I find my news. It's called the forexfactory.com. So Wednesday, what's today? Today's Tuesday. So Wednesday, July 5th. No, August 5th. This month. Let's go to the next month. Wednesday, French US. We have final services PMI, crude oil investors. Oh, we got news tomorrow. FMC. The Cook speaks tomorrow at 4 o'clock when the market closes. So we got news at 9:45 Eastern, at 10 a.m. and 10:30 tomorrow. Late now. Hard push for 765. I like it though. The stock market's fun. It's fun. You just gotta control your emotions and be careful out here. But you guys have seen my 4-hour technique. I hope you've enjoyed it. They respect them levels. They break out. Respect it, break out. Respect it, break out. They respect it.
And you said this will be in the recordings?
Yeah. I have to turn it into like a YouTube video. You can never get this in Discord.
Okay.
Yeah,
Cool.
I'll put a YouTube video up on the funded family, full funded family. I'll tag everybody so they can go back and see it. But select it, pull it back, go to the next level. Pull it back, go to the next level. Doing over and over and over again the same. We go up. There are moments where the news will just drive the market hundreds and hundreds of dollars like it did this morning, but usually there's a general trend of respecting levels and then going to the next level. So now we're in this very wide area heading towards the next supply zone. So the next supply zone will be the draw up. You go to the 4-hour time frame to look for that supply zone. You see that it's right here. Draw this down a little bit to right there. You see it right there. All these areas respected. Supply and demand, supply zone up here next. Okay, I'll just put the 606. And now you get this whole little area right here as a supply zone. At that level, we started drawing down towards the previous level. It's always going to be a draw to our previous level. You guys have a great day. Thank you so much for spending your time with me. That is it. You guys know the motto is always take the easy money. This has been another Full Transparency Trading Session where I'm your host, Sebastian, and I'm out.
Sounds good.